So far we've looked at how the currency of the past, so from the barter to gold or silver, and if you remember, Judas Iscariot was paid 30 pieces of silver to betray Jesus, so this was a currency in the good old days, and how that has been replaced by our fiat currency of today. And maybe you're feeling a little bit nervous and you're thinking that the dollar bill should look a bit more like this. And there are some people who are starting to lose faith in it. And this is quite an interesting one. This is called the goldback. So whereas this is sometimes referred to as the greenback, the dollar, this is actually a goldback. And this is a piece of gold. This is 1,000th of an ounce of gold, and it's printed onto a piece of plastic. So it actually bends up and I can put it into my wallet. This is issued in the state of Utah, and it's quite interesting. So this actually it's $1,000. Here we go. Put it the right way up. It's not $1,000. It's 1,000th of an ounce of gold, and gold today trades at about $2,000 an ounce, which means that this has $2 worth of gold. So the inherent value of this is $2, and the theory is that you can take this into any shop and say, look, I've got $2 worth of gold, can I swap it for $2 worth of goods and services? And you don't have to depend on the US government owing you the money, because it's a physical metal. It's inherently backed. It's not even backed by the gold, it is the gold itself. So that's quite an interesting reaction to a lot of the money printing we've been seeing going on recently. However, I want to talk a little bit more about the future and fintech, and I want to start with the story of M-Pesa. Now, M-Pesa is a really interesting story. So M-Pesa is Africa's most successful mobile money service, and effectively what they found is that in Kenya, people had their phones, and if I turned up at the roadside and I didn't have any money on me, but I wanted to buy a watermelon from a roadside stall, I could actually transfer credit from my phone to the person who was selling the watermelons, for example. So I can actually credit them, I can take my minutes and send it to them, and these minutes have value. And what we suddenly found through the M-Pesa was that actually people were using these minutes to transfer wealth between each other electronically. So they didn't need the actual physical currency as long as they had a mobile phone. And what we start to see through M-Pesa is that it shows us that whilst we need an electronic means of transferring wealth, we don't necessarily need banks to perform that function. You think about, for example, PayPal. Okay, the ability for us to transfer our wealth through PayPal or Revolut, for example, they're not actual physical banks, but they're a means of transferring wealth. Now, obviously with PayPal, we are transferring dollars or pounds or sterling or yen, etc., etc. But M-Pesa, you could actually transfer the minutes rather than the actual dollars, for example. So when we think about the world of fintech, and fintech is financial technology, so it's using technology for the financial world and financial services. So the world of fintech is merely a natural extension of the modern world in which we live. We're very innovative creatures, and it's coming. We're just very, very innovative, and we're inventing these new ways of transferring wealth between you and me and using as a means of exchange. And it's coming, and whether we like it or not, fintech is coming, and for some people it has actually arrived. And therefore cryptocurrency is merely a natural extension, just as this naturally turns into this, and this is becoming increasingly rare and is going onto our bank cards. So cryptocurrency is merely a natural extension of a means and mechanism for transferring wealth from one person to another. Now we're going to look at fintech and cryptocurrencies, and when we talk about cryptocurrencies, there's lots and lots of cryptocurrencies out there. There's hundreds of currencies and tokens, and I'm not going to get into the detail of the specifications and the sort of advantages and disadvantages of each one. We are going to talk about Bitcoin because it's the biggest, it's the best known, but there are lots and lots of other cryptocurrencies out there. So let's just look at the difference between a fiat currency and the way a fiat currency is transferred and a crypto which is transferred on the blockchain. And in fact, Bitcoin sits on the blockchain and other cryptocurrencies will use blockchain technology, and tokens will sit on top of that. Okay. Now, the first one is the fiat currency depends on a central bank. Okay, so we've talked about the Central Bank of America and the Central Bank of the UK and Japan and People's Bank of China, etc., etc. So we all need these central banks. And if I send you some money, I send it through my bank. So effectively, my bank keeps a record of everybody's ledgers and who owns what and owes what, etc., etc. Okay. In the blockchain, this is decentralized. It doesn't sit in one place. It's everybody on the network sort of saying, yes, we all agree with each other. So it's very easy to hack a central bank because all you've got to do is get in through the front door. Now, when I say it's easy, it's not that easy because they invest in a lot of security to prevent you getting in. But it's very difficult to hack a decentralized network because you've basically got to hack everybody on the network all at the same time and change the ledger. You don't have to just hack into one bank account and change the number. You've got to hack into everybody's bank account all at the same time. And that's nigh impossible. HSBC will keep a private ledger. So our banks will keep, these commercial banks will keep a private ledger. So, they know how much I've got in my bank account and I know how much, but nobody else does. Well, the government obviously does, but nobody else knows how much is in my bank account. Whereas on the blockchain, it's a public ledger. Okay, so when there's a transaction, if I send you Bitcoin, it sits on this public ledger. We can see it. Everybody can see it. They can't see who I am because I'm in code, and they can't see who you are because you're in code, and they can't see how much was sent, but they can see the transaction. The string of code sits there on the public ledger. It's publicly available. And therefore, because we have this central bank, it's all about regulation and audit. We've got to regulate it, we've got to check it, we've got to make sure they've got systems and controls and processes and they're secure, etc., etc. Whereas on the blockchain, we don't need that because we've got independent verification. If I send you some Bitcoin on the blockchain, what I'm basically saying is I've sent some Bitcoin over here. Other people on the network are going, yep, no, we agree with that. Everybody in the network goes, yep, do we agree? Do we agree? Yes, we do. Bang. And then the blockchain actually is then immutable. It's created and it's immutable. And that transaction is then recorded in history. Whereas over here in our fiat currencies, I need to tell my bank to send you some money. My bank then talks to your bank and says, my person says that, they want to put money into your person's account, and then they talk to you to make, and there's lots of things that could go wrong in that kind of process. We depend on each of them having, good systems and processes. Nothing like that in the blockchain. And obviously fiat currencies through fractional reserving, through quantitative easing, it's all about money creation. Whereas in the blockchain, certainly for Bitcoin, you can't create any more Bitcoin. There's about 18.5 million Bitcoins in circulation right now, and there's a maximum of 21 million. And when you hit the limit, that's it. There's no more. It's a bit like gold. There's only a finite amount of gold in the world. Some of it is underground, admittedly, and you need to mine it out. But once you've mined all the gold in the world, there is no more gold. So let's look at the history of Bitcoin. Bitcoin born in about October 2008. It was a white paper written by an individual or group of individuals called Satoshi Nakamoto, who remain to this day a mysterious, unidentified individual. So nobody's actually confirmed their name. The first ever block was mined on the blockchain by Satoshi Nakamoto for 50 Bitcoins, and this was known as the Genesis block. And what's interesting about the Genesis block is it refers to the times on the day, and the times it refers to the 3rd of January 2009, Chancellor on the brink of second bailout for banks. Now, where did the Chancellor, this is the UK Chancellor, where did the Chancellor get the money for the second bailout of the banks, do you think? Well, you're now ahead of the game than most people. You know it was through quantitative easing. They just created the money and stuck it in the banks. Okay, so here is the actual blockchain itself. A lot of code. Now, I don't understand this code, and you probably don't understand this code, but it doesn't matter. We don't need to understand the code in exactly the same way that I don't know how the internet works. And you probably don't know how the internet works, but we know it works because we're using it. And you're probably watching this on the internet, and we're harnessing the power of the internet without actually understanding the technology that sits behind it. Well, that's the way to think about Bitcoin and cryptocurrency. You can harness the power of cryptocurrency. You don't necessarily have to understand the technology. Anyway, here is the Genesis block. It's a lot of code, lots of zeros and numbers and letters, and I have no idea what it all means, but what you can see, and I've highlighted it for you, is that quote that refers to the 3rd of January 2009 in the Times, and really refers to the ability of governments to create money out of thin air. So what is a Bitcoin? A Bitcoin is a unit of cryptocurrency, and it sits on the blockchain. So the blockchain is actually the technology that sits underneath a Bitcoin. Okay. New blocks are added every 10 minutes. So roughly what happens is that there's a transaction, there's lots of different transactions. This is all happening in the network. Everyone's looking at it. And then what we call the miners are they're trying to solve a problem. And when the first person to solve the problem says, I've solved the problem, we create the block, bang, that block is then is created. You can see it. It's there forever and ever and ever. You can see it on the internet, and it's immutable. And this happens about every 10 minutes. There's a maximum, as I mentioned, of 21 million Bitcoins, and they're expecting that we're going to reach that maximum round about the year 2140. So in effect, it's a bit like saying they're mining gold today. When are they going to have mined all the gold which is available to mine? That's kind of the similarity there. So Bitcoins in exactly the same way are created, and I use that in inverted commas, through mining. And the way that people mine them is that they are solving these problems, and every time they solve the problem, they create the next block and they get awarded with a few Bitcoins. And this amount that they're given halves every 4 years. So effectively it's making it increasingly scarce. So a little bit like mining for gold. In the early days of mining for gold, it's very easy. You think about the gold rush down to California. You find these nuggets lying in rivers, for example. But once everyone's picked up all the easy ones, then you need to dig down a little bit. And today, the only people who can really mine gold are the really big miners who dig very, very big holes and go all the way down and find their gold seams. So it's increasingly difficult to mine. And that's exactly the same as Bitcoin. So Bitcoin is sharing some very similar characteristics. You can't physically touch it. It's not like gold where you can actually say, I've got a piece of gold and put it in your pocket. It is a string of code, but it's finite, which is not like our cryptocurrency. So it is finite, and it's also increasingly difficult to get any more of. So to get more of these, if you're the US Federal Reserve, it's really very easy. You just type it into your computer. But if you're a miner for gold, it's very difficult. If you're a miner for Bitcoin, it's very, very difficult. So mining involves solving increasingly complex problems, which means it needs a lot of computing power. So you might read about stories about people who are they got server farms who are crunching these numbers and trying to solve these problems, and they get rewarded when they do. Of the first person to solve the problem gets the Bitcoin. So Bitcoin. Let's look at Bitcoin in terms of our 4 criteria of a currency, and in terms of that 4 criteria, you'll notice that I've tried to help you kind of remember those 4 criteria nice and easily. So the mnemonic of the first letters is, of course, cash. So can you create a Bitcoin? Well, the answer is no, you can't create a Bitcoin, and therefore I think we can give the creation a tick. Now, you can't destroy a Bitcoin, but you can lose a Bitcoin. Just like you can take this and you can drop it over the side of the boat, and it can sink down to the bottom of the ocean, and you'll never see it again. Exactly the same way you'll read about people who lost their keys or lost the password, or dropped a hard drive into a bin, for example. Okay, but you can't create Bitcoin. You can mine it like gold, but you can't create it. Okay. What about its application? Well, hopefully you're going to agree with me that you can't use a Bitcoin for anything else. I mean, we talked about the industrial application of gold. You can't build a bridge from gold. It's too soft. The bridge would collapse and somebody would nick it anyway. You certainly can't build a bridge from Bitcoin. So it has no other application. It is only there as a currency. There's no other application for it. So we can tick that one as well. Come back to store of wealth in a minute. Let's look at homogeneous. Is it homogeneous? Is it fungible? Well, if I give you a Bitcoin and you give me a different Bitcoin, that's fine. You know, a Bitcoin is a Bitcoin, so it's certainly homogeneous. And it's also divisible. So it's actually divisible down to 1 Satoshi. 1 Satoshi is 1/100 millionth of a Bitcoin. So if Bitcoin is trading, and today it's round about $30,000 when I'm recording this, you might think, I don't want to buy a Bitcoin, I haven't got $30,000. Well, it's not a problem. You don't have to buy a whole Bitcoin. You can buy a little bit of a Bitcoin. You can buy a Satoshi or a number of Satoshis. So a Satoshi as a unit of a Bitcoin effectively says that if a Bitcoin is worth $1 million, a Satoshi is worth 1 cent. So rather than thinking in Bitcoin, maybe we should actually think in Satoshis. We should be referring to Satoshis and talking Satoshis. Because, you know, I'm going to buy something. I'm not going to buy a coffee for a bit of a Bitcoin, for example. I have to break a bit off, for example. You know, I can just talk about, well, I can buy a coffee for 9,000 Satoshis, for example. And we can think about what that is actually worth. So, go back to our ticks. Is it homogeneous? Is it divisible? Absolutely, yes it is. So our last one is a store of wealth. Is it a store of wealth? Now we can get a little bit contentious here, and we hear a lot about people saying, oh, Bitcoin's in a bubble. And Bitcoin's in a bubble. Well, we've heard that one before. And what's interesting about Bitcoin being in a bubble is the definition of a bubble. Now, some people will say a bubble is merely a bull market where you don't have a position. So if you're in, you're saying it's a bull market, and if you're sitting on the sidelines and you think you've missed out, you say, oh, it's a bubble and it's all going to end in tears. And I've compared here, or I've got a chart here from Bank of America Merrill Lynch, who've compared lots of different bubbles in history. And they've looked at tulip bubbles in the Mississippi and the South Sea Company and gold and 1929, etc., etc. And what you see with bubbles is bubbles, they go all the way up and they come all the way back down again. And what's interesting about Bitcoin is that, yes, it has gone up and yes, it has come down, but it has come all the way down because it's kind of coming back again. And when I was sent this, there was a kind of question of like, well, what happens now? And I've circled the point at which I was sent it in red. And this was a while ago. And so if we look at where it is now, that red was actually that point there. So it went all the way up to $20,000 a Bitcoin. Everyone's going, oh, how can you pay $20,000 for a Bitcoin? It has no value. It's just a bubble, etc., etc. It's a string of code. And it came all the way back down again. And then it was on the way back up again, and then it did correct down again, and it carries on going up. Now, if you look at that and you think it's volatile, I'll admit that it is volatile. It's a very new technology. It's very, very new concept. People are nervous. They're like, oh, should I buy it? Should I not buy it? So it is very volatile, and we need, one of the things I need from this is I need stability. I need price stability. So it's not a really good currency right now. It is too volatile, but what's interesting is that there's a trend upwards. If you look at that trend, there's a trend upwards. And if you go all the way back to the very beginning of this chart, you'll see a very little tick up. And actually, when that tick up first happened, that was a bubble. Okay, and everyone go, oh, there's a bubble. It went from $10 to $100. How could you pay $100 for a Bitcoin? Well, I reckon today you're thinking, if I'd have had the opportunity to buy $100 of Bitcoin, knowing what I know now, I'd have done it back in 2011, for example. So think about a Bitcoin. Bitcoin, it has been holding its value, despite the doomsayers, and there are constantly stories in the press saying that it's in a bubble and it's going to die. And the number of times that people have said that the Bitcoin is in a bubble and it's going to die is almost too numerous to count. Yet it's still there. It still has value. Yet I can tell you now that from history, the purchasing power of a dollar is going down. This has been going down. It will continue to go down. As the central bank continues to print these, it is losing its purchasing power. That is almost guaranteed. Now, I'm not going to guarantee a Bitcoin will go up in value, but I think that there's a higher probability that that will go down in value compared with Bitcoin going up in value, if that makes sense. So I reckon, based on that we can give a tick that it's a store of wealth. It may be very volatile and it may very well go to zero. Okay, so right now I'm not necessarily saying you want to bet your shirt. You don't want to do leverage bets. You want to sell your house and put it into Bitcoin. but there's an element that says it's been around for a long time. It's been around since 2009. It's 10 years old. It's still here, despite a lot of doomsayers. It kind of feels it's going to be here for a while. And it's also saying that if it's not Bitcoin, it's probably going to be one of the other cryptocurrencies, because there's a lot of cryptocurrencies out there. So, how do you know that this is genuine and not fake? Okay, well, you've got the watermark, you've got the very intricate detail, you look at the actual printing and the design. It's very, very intricate, and it's designed to make it very difficult for you and me to actually create one of these, which is obviously illegal. But the Bitcoin, you know it's genuine because it sits on the blockchain. If you can't find it on the blockchain, then it's not a genuine Bitcoin. So if you send me a Bitcoin, I can see that it's a genuine transaction because the code is there on the blockchain. How do you know how much money you have in your bank account? Well, you have to phone up your bank and you have to trust that they have got a proper record and that they haven't been hacked, and that they send you this information through your statement, and you probably keep a record and go, yeah, no, that's how much I thought I had in my bank account. On the blockchain, it's all there. It's immutable. It's in code. How do you know that if I make a payment to you that payment is actually correctly transferred? I rely on the banks and the centralized systems and processes that they have. But if I transfer a Bitcoin to you, it's on the blockchain. It's all done through this peer-to-peer network. How do I know that this will purchase $1 worth of goods and services? Well, I depend on you having faith in this and being able to accept it and then pass it on. And exactly the same as a Bitcoin. All I need is for you to have faith in it, because if everybody has faith in it, it doesn't matter if I believe in it or not. If you believe in it, then it has value. And how do I know that the dollars in my bank account are mine? Well, that's a silly question because they are mine. But let's look at some experiences of capital controls. For example, Cyprus. In 2013, about 50% of deposits over $100,000 in Cypriot bank accounts were seized. The country was basically bankrupt. In order to bail itself out, it froze all the bank accounts, and then it said, if you've got 200,000 euros in your bank account, basically we're just going to take the top 50 euros. Sorry, nothing you can do about it. That's pretty scary, isn't it? Blockchain, they can't do that, because in the Bitcoin, they don't have access to be able to access your account directly. Similarly, in Greece in 2015, they had to impose capital controls. They had to restrict people to taking out 60 euros per day. And there were controls on international transfers. You couldn't get your money out of Greece. They imposed these capital controls, and this was as a result of the Greek debt financial crisis. Okay, blockchain, it's outside of the reach of the governments. They can't actually access it. They can't impose capital controls. They can't effectively just give you a haircut and take money out of your bank account. Now, a lot of people look at me and say, well, Bitcoin, you can't see a Bitcoin. At least I can see a dollar. Well, yes, this isn't actually a dollar. This is a pretty pictures on a piece of paper or a piece of cotton, as we've discussed. This represents a dollar. It's just an IOU. It really has no more value than one of these, only obviously this is backed by, well, our friend who is a mythical person, and this is backed by the US government. So as long as you believe the US government, then this will have value. So Bitcoin, the fact that you've never seen a Bitcoin, I don't think that's really a good argument. And then I think to myself, well, I've never seen an air mile. I know it has value because I use them in order to, buy trips for my family when we go on holiday. I've never seen it. I've seen a statement with them on, but I've never seen a physical air mile. Here in the UK, we have something called Nectar Points. I've never seen a Nectar Point. I have a card, I have a loyalty card, and it credits Nectar Points when I buy my shopping, and I can use it to buy stuff, but I've never actually physically seen a Nectar Point. So we need to be careful that we don't get drawn into that because I can't see it, it doesn't exist. It does exist, it exists in string of code, and you can see a Bitcoin. The transactions sit on the blockchain. Okay, you can see them if you're interested, but it's just a string of code. So as I mentioned, blockchain, there's lots of different cryptocurrencies out there, and blockchain may not be the one that actually wins. So when we think about the bubbles, think about the railway bubble, for example. the move west in America, people putting down railways, lots of companies putting down railways, most of them went bust. And the ones that didn't go bust, who were strong enough, bought all the ones that did go bust, but the infrastructure had been laid. And therefore America thrived because of that massive investment in infrastructure. Tulips, the tulip, massive tulip bubble. But if you buy tulips today, where do you buy them from? Holland, because the infrastructure was laid. Think about the TMT, the technology bubble of 2000. The technology bubble, massive amount of investment in technology, lots of companies go bust, and who wins? Well, people like Facebook, founded in 2003, coming out of the ashes of the original bubble, and they were able to leverage the infrastructure that had been laid as a result. So maybe Bitcoin isn't going to be the winner. Maybe Bitcoin is going to be Facebook. Maybe Bitcoin's going to be Amazon. Maybe Bitcoin's going to be MySpace or the original boohoo.com who collapsed. So maybe it's not going to be the one that actually wins. Maybe one of these other ones is going to win. I don't know. Who knows the answer to that? But the point, I believe, is that whatever does win, crypto is here. It's part of our lives. It's going to become an increasingly part of our life. And you've really got two options. You can either sit on the sidelines and say, nope, it's nothing to do with me, or you can get involved and you can have a go. And it's really very easy. You've got to set up a wallet over here using one of the online wallet spaces, set up a wallet over here, buy a few bits of Bitcoin, buy a few Satoshi, $100, don't bet the bank, buy a little bit, transfer it to this wallet over here, and then transfer it back again. And once you've done that, and you can see those transfers on the blockchain, you're part of the revolution. And at least you're in the game, you understand it. So I would suggest that you don't dismiss something that you haven't actually tried. Here's blockchain, the market capitalization of blockchain. Now that previous slide I showed you that the Bitcoin, the biggest currency by market capitalization, it's about $600 billion in market capitalization. Now when I was sent this chart by Blocked Out Capital, you can see that blockchain, Bitcoin, I'm using Bitcoin and blockchain interchangeably. So Bitcoin was sitting down at about 183 billion, something like that. Well, today's valuation at the time of recording this, about $600 billion, puts it in terms of a global currency somewhere up there. That's ahead of the Indian rupee, ahead of the Saudi rial, for example, ahead of the, you can see that the Singapore dollar. So some fairly established currencies there. Up at the top, the biggest currency by market cap is the yuan. You kind of expect that, the biggest global trading bloc in the world. The United States dollar, very just behind. The euro, and the dollar has been painted green just to show you that this is the world's reserve currency. So I can use this in pretty much any country in the world. My pounds are less acceptable. The euro is obviously big. The yen, Japan, very big economy. Gold is number 5, and then pound sterling, the good old mighty British pound, slightly fallen off its perch, quite significantly below gold. And then we list other currencies further down. So Bitcoin, if it's actually going to be put on a currency, it's sitting somewhere halfway in this table. And we think about the potential of cryptocurrencies. So you may have read recently about Facebook and their potential cryptocurrency of Libra. Now Facebook are starting to think about this cryptocurrency. They at the time of recording, they've kind of shelved the plans. I think they've got a few regulatory issues with social media that they kind of need to sort out before they start upsetting people by launching their own cryptocurrency. But when you think about Facebook, if you think about a market such as, I don't know, India, for example, and you think about the success of the M-Pesa, think about today and how many people in India have a Facebook account, and how many people don't have a bank account, and how many people both have a Facebook account but no bank account. And if you have a Facebook account and I have a Facebook account and neither of us have a bank account, maybe Facebook has an opportunity, a cryptocurrency, for us to transact between each other using something like the Libra, for example. Okay, so the potential here is massive. I'm not saying it's going to happen overnight, but we're starting to see ourselves moving in that direction. And that's effectively where the world is going. So just as we have evolved as humans, from the apes through Darwinism, and we're continuing to evolve, so we're seeing the currencies are evolving from this, our silver and our gold. And I don't think we're going to go back to that. I don't think that's going to catch on. We're not going to go backwards in evolution. We're not going to go back to the gold standard. This is the currency of today. Here it is. But the currency of the future is going to be electronic, and crypto is an electronic currency. And it's just a natural extension of the way that we can store and transfer our wealth.